How's it going? I'm Andrew with Investors Hub, and this is 5 things from the market this week, plus me ranting for a little while. So, kicking it off with crypto because it happened first chronologically, and because I get to open this up with kicking it off with crypto because I'm cringy, is that Bitcoin dropped to $28,000, and then it bounced off of that and popped up to $34,000. Apparently, Kathy Wood bought the dip for Bitcoin there. She also bought the dip on DKNG when the Hindenburg announcement came out last week. So, yeah, and Bitcoin seemed to be sliding a little bit leading into me talking to you right now here on Friday. So there seems to be a sort of a slow, chronic decline going on with Bitcoin right now. So we spoke with Clem earlier this week, and he gave his Bitcoin investing strategy. It's not a Bitcoin trading strategy. He rebuked me for that. But no, it's a Bitcoin investing strategy. And I'm not an investment professional, but it seems like a pretty sound one to me. And it's not particularly complicated. There's no wheeling and dealing. There's no real market timing. His principle is that he's going to start accumulating Bitcoin and other cryptocurrencies when Bitcoin drops below $20,000. And he's going to keep accumulating regardless of what the price is up until the Bitcoin halving 4 years from now, which he thinks is going to be the catalyst for the next crypto takeoff. So yeah, be sure to check out that video after you're finished with this one. So I actually lied. There was something that happened before the cryptocurrency thing, but then I wouldn't be able to start the video with kicking it off with crypto. So we learned about some new developments with regards to the whole naked short selling fiasco. So there's this proposed rule that's coming forth from the NSCC to the SEC about changing the liquidity requirements for the NSCC in order to basically help with market volatility. And I got to pick up my paper for this one because it's kind of complicated and I don't want to say it wrong. I also don't want to do this in 10,000 takes. So as my best possible summary, trying to summarize a complicated government document quickly, this is what I got for you. So the National Securities Clearing Corporation is a middleman for the middlemen. It ensures that all the brokers and finance boys pay up and maintain their liquidity requirements. Requirements are calculated now on a 90-day estimated basis and are enforced around monthly options expiry periods. The NSCC is petitioning the SEC to get the power to enact daily liquidity requirements calculated on much shorter timetables, which implies that would make doing naked short selling and other financial switcheroos much more challenging, because they wouldn't have that grace period of nobody asking them to pay up and prove they own what they own. However, the ruling is approved on an accelerated basis, and I don't really know what that means with regards to how long this is going to take to go into effect. So the NSCC has to go through the SEC in order to make this like an official thing. So I assume that it's just the NSCC is approving their part. Yes, we agree with this particular amendment that was in question, and we're approving the whole thing to go forward to the SEC. This is how I assume it's going to work. And then the SEC has to then do their thing. I'd actually like to do some research on exactly how all of these sort of complex financial institutions weave together. And I think that'd make for a fun video because, you're going to see all these things in the news and people are going to talk about it. And it's this really strange and obfuscated network of companies and companies within companies and shell companies and other type deals. So if you don't understand how they all fit together, then it's all gobbledygook and it doesn't mean anything. So hopefully this was an effective summary for you. I'm going to link the document down below, and you can check out the other documents and try and parse through them yourself if you want. So we're going to move on to something that's a bit more simple and fun. Is that Krispy Kreme is IPOing next week. Their share price is supposed to be around $22 a share. And fun fact, I didn't know this because I was like 4 years old at the time. They IPO'd back in 2000 around the dot-com bubble. And then they went private again in 2017. And then, so this is actually their second time going public. And their ticker symbol is going to be DNUT, which is some solid meme material. So Jay Powell spoke to a House committee on Tuesday, the Coronavirus Crisis House Committee, and he says basically the same thing that he's been saying this whole time. Yes, inflation is running hot. No, we don't care. We think it's temporary. Yes, we missed some numbers, but we're going to keep quantitative easing until we hit those numbers. And he he repeated that a bunch of times. And he didn't really say anything particularly different than what he says during his FOMC press conferences after they have their meetings. But the reason why you should watch it and the reason why I bring it up is because it's hilarious. It is something that is actually legitimately funny, but it's also infuriating, right? So the best part about it is you've got J-Powell, right? And J-Powell, whether you agree with what he's done and not done and his handling of the whole issue, he is a pretty chill dude, right? As he answers questions calmly and he deals with situations pretty chill, right? And then you got so it was streamed on YouTube on Yahoo Finance. So you have the Yahoo Finance chat screaming about all sorts of random stuff. It's absolutely hilarious. But of course, he can't see that. Then he's sitting in front of the House Committee. And the House Committee has this just combination of just super loaded questions and weird ass kissing and all this stuff, off-topic nonsense. And some people are playing hardball, some people are just kissing butt. It's absolutely hilarious, right? It really makes you feel like this whole like country that we got is like running on a thread. I don't know. It tickles my particular sense of humor. So yeah, it's Friday, and it should be Friday night by the time this comes out. So go grab yourself a glass of whiskey, get lightly sauced, sit down and watch the committee meeting. It's actually really funny. So lastly, Peloton, the exercise equipment manufacturer, is getting an even more flack. So in a stroke of peak capitalism, they've managed to turn crushing a kid to death into a residual revenue generating opportunity. So if you didn't know, their Tread Plus treadmills, which I guess is their like more flagship treadmill, it costs like $3,000. It's extremely expensive. Well, a kid got sucked underneath it and he died, right? And so they issued a recall of all those treadmills. And as a part of the recall, they then installed this Tread Guard software, which is just a thing that locks the tread from spinning and the machine from operating. Except, before, if you didn't have a Peloton subscription, you could hop on the treadmill and just hit the Just Run button, and it just does treadmill stuff, right? And the subscription was for if you wanted to do the games and all the different settings and classes and stuff. But now you have to unlock it using the Tread Guard feature, which is locked behind a subscription paywall. Now they're giving out 3 months of free subscription, but still the message is sent, right? They're gonna make you spend $40 a month to use your treadmill, but they're doing it under the guise of, we care about the health and safety of our customers. If you cared about the health and safety of your customers, you'd just put like a grating or something underneath the machine, or you would, I don't know, have a pressure sensor or something on the actual treadmill to make sure the person's on it, or any number of things other than capitalizing on something that you seriously screwed up. So yeah, that's it for the market recap. If you like the video, be sure to like, comment, and subscribe. You can follow us on Twitter, ihub_vision, and I'll see you again soon.